I told you, you could buy real estate with only $100 in your pocket. You don't believe me? Then watch to the end. The second option of real estate investment without much capital is crowdfunding. This method is similar to REITs, but there are still some differences. Real estate crowdfunding can be compared to participating in a book club. But instead of discussing books, you combine your funds with other people to invest in real estate properties. This approach allows you to start with a smaller amount than you would normally need to buy real estate on your own. By investing your money in a common fund through an online platform, you own a share in an investment property. These platforms take care of the investment management, freeing you from worries associated with property management. Your profits will depend on how well the property performs. So, how do you make money from real estate crowdfunding? Let me give you an example. Imagine that you and your friends find an attractive apartment in Dubai. You decide to invest in it, buy that apartment and rent it out or sell it. The profit from rent or sale is then distributed to all investors. This is the basic way to make money. Now, let's look at the pros and cons in this type of investing. Let's start with the advantages. First, you can invest in a project that you are really interested in and meets your preferences. This gives you control over the choice of an object for investment. Secondly, the low entry minimum makes crowdfunding accessible to a wide audience without requiring tens of thousands of dollars to start. However, there are disadvantages as well. First, investments are made through specialized platforms, not on exchanges. Therefore, it is important to carefully study the chosen platform to avoid becoming a victim of fraud. Secondly, you do not become the owner of the property itself. When you buy your own apartment, you can manage it at any time, come there and do whatever you want. In the case of crowdfunding, you only invest in the project without having full freedom to manage the property. REITs are a very cool tool because you can use them to protect your capital from inflation. After all, real estate rents usually rise in line with inflation. Meanwhile, investors are exempted for services costs such as repairs, security, and property management. Why invest in REIT funds? Let's talk about pros and cons. First, even without having a significant amount of capital, anyone can invest in real estate, since it does not require to have a lot of funds to buy property. Secondly, the shareholders get the opportunity to invest in different types of real estate. For example, ranging from residential apartments to office buildings and warehouses. Third, like stocks to other companies. REIT funds are highly marketable. That is, REIT funds can be easily bought or sold on the stock exchange. Fourth, each shareholder receives their dividends regularly, providing a stable income. However, REITs also have their disadvantages. First, limited growth potential. Public REITs are required to pay out a large percentage of their profits to investors in form of dividends. This leaves little room to expand the portfolio to acquiring new properties. Second, the lack of control over real estate. Investors who invest directly in a real estate have significant control over returns. They can select properties with high cash flow, actually rent to renters, carefully review applications, and implement other management practices. REIT investors, however, are without these options and can only sell the shares if they are not satisfied with the results. So, you don't own the property. You are simply investing in the project and don't have the freedom to manage the real estate. And there are some scams. Yes, even in the first field, you can be fooled. So, before investment, research a particular project in detail. Give us a like and subscribe, and I'll see you in the next video.